Hey traders, welcome to the top tier outlook. We're going to take a look at the week ahead, including positions that we have on already and what kind of setups, what kind of economic events. We'll take a look also at earnings that we have coming up this week. So on Sunday evenings, what I like to do, especially after a great Mexican GP race, so congratulations to the Ferrari fans. Great race by Ferrari. So watch a little MotoGP and then take a look at the week to come. A couple basic things when we look at the week to come. So I'm going to show you some of the calendars that I use when I am setting up the upcoming week. And the first calendar that I use is over at Forex Factor. So let's start off with what we've got coming up. It's the last week of the month, which means that we also have the last trading day of the month coming up this week, which isn't as important as the last trading day, say, of the quarter. So not as big a deal. However, that does mean if it's the first trading day of the new month, that means we have on Friday the non-farm employment change or the non-farm payroll. And because we are in this rate cutting cycle now, and because the Federal Reserve has a dual mandate of both jobs and inflation, the jobs metrics are, do folks have jobs? Are there more jobs available than not? And are those people spending money is kind of a really important theme that we're going to see throughout this rate cutting cycle. And this will be, bad news will be good news, likely in this particular employment outlook. So bad news would mean the Federal Reserve has to keep on with the rate cuts. So that is probably the biggest event in terms of hot zones, bigger, yes, than even the core PCE that we're going to get on Thursday. Yes, even bigger than the Bank of Japan. The Bank of Japan, isn't this a big deal? Remember, they hiked in April. They hiked again at the end of July. So we had one hike before the one that broke the market here in August. And the reason I look at that and say, hey, let's take a breath is because it wasn't the Bank of Japan alone. This was the perfect storm, and we were Marky Mark. We had not just the second rate hike from the Bank of Japan, but we also had a terrible non-farm payroll. So put all that together, those two events made for a very raucous early part of August. It wasn't just a BOJ decision to hike rates. In fact, that was their second rate hike. All right, we do have also GDP coming, which, let's face it, does anyone know what a recession is anymore? I mean, really, a recession used to have a definition. 2 sequential negative growth quarters. We've had those, and the Federal Reserve chose not to call it a recession. So we don't really see that much emphasis on GDP because we really don't know if it means anything to the Federal Reserve anymore. Obviously, we want to see growth, especially in a cutting cycle. So I would look at, we want to see GDP obviously stable, if not ticking up. But it's really lost a lot of its meaning because whatever meaning it did have, it's been just pushed aside. What other jobs numbers do we have this week that are worth watching? Well, before we get to non-farm, and I'm going through the week backwards for no particular reason, but before we get the non-farm on Tuesday, we're going to get the job opening. So this is going to be something we get before NFP, but it is an important one. I would consider JOLTS job openings the number 2 most important jobs metrics we get. Yes, even more important than the weekly claims. Consumer confidence will be a big one because anything that has to do with, is the consumer employed? Are they confident? Are they spending money? Just all these consumer type topics are going to continue to be front and center. So that's one part of the economic calendar. The other, I'm just going to move this clock over for a moment. Let's darken this page up. We don't need it quite so bright because the side of the page I'm looking at is the far left. This is Estimize. You can see the spelling in the upper left-hand corner. And Estimize is where I curate my own list of symbols that I want to watch. I don't want to see some cutesy calendar with the little logos on it on Monday telling me what's going to come the next 1 to 4 days from now. Really not all that helpful. I could do the same thing here. I mean, take a look at what's coming up on Tuesday. D.H. Horton, McDonald's, Pfizer, we've got AMD. We've got Chubb, we've got Google, Mondelez, SMCI, Visa. All right, that's coming up day after tomorrow. But day after tomorrow that's too late. I'm not an options writer, so I'm not looking to take advantage of the vol crush. Perfectly fine thing to do if you have a margin account and you don't have the headaches of the pattern day trading role that margin accounts bring. But if you're like me, I like to trade in a cash account. I don't like to have the PDT problem, and therefore I do not write premium, and I'm perfectly fine and happy doing that. And that's okay. Lots of ways to do this game called trading. But if I'm looking at things this Tuesday, implied volatility has already gone up, discounting has already happened. The trick is, can I find things that are going to be releasing earnings essentially 2 weeks from now? So that would bring me to November 11. The closest that I'm even interested in any kind of earnings release is at least 1, if not 2 weeks out. And that's going to be things like Home Depot, Cisco, Disney, AMAT, Lowe's, Medtronic, Walmart, Deere, TJ Maxx, Nvidia, right? These are the things that I'm going to be looking at. What are those hot zones that are coming out roughly 2 weeks from now or longer? That means my preparation time is really more about a swing trade in front of the economic event, the hot zone called earnings. That means I'm really looking to buy the dip in those trending stocks before they have their earnings release. And that means it's not a specialty setup about earnings. It's more about a classic setup that I would look for anyways, with earnings basically being the eject button, the time-based close of the trade that I would impose on it because of an event that I don't want to sit through. So there's lots of ways to think about this, right? For every, for every Tesla out there where earnings brings the gap up, there are earnings like IBM. And IBM was in a really great trend, which bring a big gap down, right? So for every earnings release that just kind of is a binary move to the upside, we can have the opposite. And I don't want to reduce my trading to a coin flip, especially with this level of volatility. So thanks, but no thanks on earnings. But just keep in mind why I like to hit the eject button before we get to earnings, because IBM was a gorgeous trading stock. We traded this quite a bit in the Sector Secrets Mastery, or for quite a long time, I should say, in the Sector Secrets Mastery. And then I want to be done with it by the time we get to earnings. So take advantage of all this. For example, if earnings comes out, as you can see, came out on the 23rd, I want to really focus on the first week of September. The first week of September, as far as when that window for the rally into earnings begins 6 weeks out. Between 4 weeks and 2 weeks is really a sweet spot. And then when I'm basically inside of 24 to 48 hours, I'll get out. I'll take my ball and I'll go home and take a look at all the opportunities we had where we could take advantage of the green candle in the gray zone, buy, take profit, rinse, and repeat. That's the kind of earnings thinking that I like to use, and it works very, very well if we use trending names. All right, so that is what's going on in the earnings world in terms of the economic calendar, as well as the economic data that we've got going on. All right, so what do we have here as we're opening up? So as always, if you have any questions, feel free to type them in. What we're looking at here this morning, we'll be looking at tomorrow morning, but we're looking at here this evening is where are we opening in relation to Friday's close. On Friday, we actually sunk down. There were a lot of interesting buying opportunities this week. I could have been a lot more active than I was and probably might regret not doing so, but we had quite a few entries. There were a couple fills on stocks like JP Morgan and Wells Fargo in the financials, which is a big part of the weighting of the S&P. The S&P itself, ES futures, sunk into the daily price movement range zone on Friday, which could have triggered an SPY entry. So it really was kind of an embarrassment of riches in terms of opportunity. Going into this week, I have actually quite a few positions still open. So the current open swings we have, and I would absolutely be open to getting into these again, would be PayPal. We've continued to really push gold in terms of long positions in GLD. And then we added, and this was tricky because Newmont Mining, talk about another earnings event that was a tricky one. Newmont Mining gapped down. Well, I gapped a little bit and then just sold off with the conference call, and it drugged GDX with it. But a lot of other stocks within GDX did not have the abysmal earnings that Newmont did. So we bought GDX instead of going into Newmont Mining. We bought some GDX, which we are long from as well. We got into regional bank trades, namely via Zion, and we got in, closed the trade. I probably could look at that one again next week, but this one was closed. We bought this one for $2.90, scaled out at 360, and exited at the break even of 290. But we had a number of trades that I've been wanting to take advantage of, mostly in financials. Grab Bank of America. And I want to mention, if I could do that one over again, if I could get that trade and that day over again, I'd probably look at Wells and JP Morgan before Bank of America. I like all three of them, but I'd say in terms of my preference, Wells was number one, then JP Morgan, then BAC. But a lot of times it's just a matter of which can you catch in the zone and take action on it. So proximity is oftentimes one of the main things that allows us to get into trades. There may be things that we want, but there are actually things that are triggering. And when those things meet, we have an entry. But sometimes there's things we want that aren't triggering. There's things that are triggering that we may not have at the very, very tippy top of our list. Bank of America is one of those situations. But I just mentioned this because JP Morgan and Wells are fine names to keep on the list. And as long as the S&P continues to move higher, that bodes well also for financials. All right. We got back into Cisco. Cisco was a great trade for us that we had October 18, third Friday of the month expiration, closed that trade out. And on Friday, we sunk back down into that zone. We've got a long position in Cisco. And then the last position that we put on was Disney. So a long position in Disney as well. I mean, there were so many setups. Like I said, SPY could have been one of them. There were so many setups that were making the proper move to the zone that I'm looking for on Friday. It's really a matter of, well, Rog, what do you want and what's triggering at the moment? You're looking at it. And these are kind of the positions that we're looking at. Now, all the indices are pretty, let's take a look at the indices through the lens that we should, which is the futures contracts. You can see here that the NASDAQ sunk down on the 25th, right? And if I'm looking at that movement, that would have been the afternoon. And look, just like I mentioned, we could have been long SPY. We definitely could have been long QQQ. So it's not a matter of whether I don't like the indices or not. I like the indices plenty. But the one index that I'm really, actually the two indices that I'm not all that interested in are the Russell and the Dow. And the reason for that, the reason I'm not really interested in the Dow is the same reason I'm not really interested in the Russell. Both of them are perfectly valid buys if you're okay with neutral trends and neutral candles in the gray zone. And not that that's not valid, but if I'm looking at probabilistic setups, if I'm looking for my favorite type of setups, checking off all the boxes possible, what I want to find is an uptrend with a green candle sinking into the zone, which is why I would say SPY and QQQ are far more my preference. And then when we step back and take a look at what's going on with the sectors that have been leading the charge so far month to date, interestingly enough, semiconductors, financials, energy, technology, communications, this actually it does benefit the Dow some, but when you've got tech moving higher and financials moving higher, that actually is going to benefit the S&P more than it's going to benefit the Dow, because the NASDAQ narrative is very much positive with consumer discretionary, communications, technology, and semiconductors, all four of those cylinders to the NASDAQ engine up. That helps the S&P more than it helps the Dow. The weighting of tech and S&P is more considerable than that of the Dow. And then you add in the financials, and that's really going to be why I'm going to continue to focus on NASDAQ and S&P going forward until I start to see a little bit more strength in things like energy and healthcare, right? That's one of the reasons the Dow has been a little laggy. Energy and healthcare, probably mostly healthcare, keeping the Dow from keeping up with S&P and NASDAQ. All right, thanks for the question. Good stuff. What are my thoughts on bonds? I've really been leaving the bond market alone. ESP, based on, and again, what I trade is going to be based on where I like the structure. So let me show you all here, because I like to talk about what we're in. So this was that list that I was reading to you as far as the positions that we're in, where we bought the symbol, the actual price, as we like to say, every entry, every exit, every day. That's what we do in the Sector Secrets Mastery. So of course you get the alerts, but then at the end of the day, I send out a trade alert recap. So anything that we've alerted out, hey, this is the price, right? This is the scale out. This is where the trade got closed. So you can see everything, right? So that's where we sit. But if you take a look at what we have been doing, I've been in and out of gold a lot. And the reason I like gold, unlike bonds, is bonds are actually, if I'm going to do anything with bonds, I really should be getting long puts. And I've probably been a little lax on this. There is a great long put strategy, which is downtrend, which we've had since October 16, red candle, which you can see we've had them steady since basically the second or third of this month, pretty much steady throughout this month. And then lastly, the red candles going into the gold zone. And the red candles going into the gold zone is the trigger. So much like I talk about green and the gray, red and the gold is basically the long put version of what I like to do, which is take advantage of weakness. So that's what we've got here on that ZB. Ultimately, if we're looking at the ZB, these would be TLT puts. I would recommend TLT puts. ESP, but if you're comfortable trading futures and you want to trade the ZB or the ZN for that matter, ZN does have sometimes IEF ETF liquidity, but ZN is pretty much the same narrative. Red candle, gold zone, downtrend. Yes, they're both very much indicating that yields on the 10-year and on the long bond are going higher. And that means getting in short positions in the futures or long puts in either the futures or that ETF. All right. Okay, moving on to PLTR and Chipotle. All right. So I don't have positions in either, but we can take a look. Tom, PLTR. So PLTR is moving higher, and that's cool. For me, if I'm going to take advantage of a trend, which this has been for much of the last month and a half, it's going to be a buy the dip. And there's really not been a lot of great buy the dips for me in PLTR. I'm not going to buy into new highs. So the closest I would say to entries that I can even see on this chart, based on the patterns and the levels that I teach in the mastery, there would only be two. One would be this particular pattern right here, this minor low, which had very good proximity to a mean reversion. And the other one would be right here, which is resting on Darvis support. So this would have been a mean reversion, nearly a mean reversion trade, and this would have been a support buy. That's really it. But I want to be a buyer and I want to pull back. So if you're looking for that again, I've got to get back down here for me to do something with PLTR. I do not buy into higher highs ever. I know it's a popular thing to do. I don't find that I can control risk and have the kind of targets that I'm used to having in terms of follow through when I buy at a higher high. Chipotle, also in and out of trends. And a couple of things you could do here with Chipotle. You know, there's a mean reversion right there, as well as the Darvis. So a couple of things to really like right there. Pretty close to a mean reversion, but not quite. So I would look for either a support level to buy off of here on Chipotle or another mean reversion, right? So until that pullback happens, and it would look something like what you saw on the 23rd as price got down to 58.5. That's the kind of zone and specificity that I want to be able to have a price trigger for my long calls. And that's the way that I would look at that. All right. Next up is, what levels am I watching ES and NQ? Will, let me know what time frame you're looking at, and I'm happy to look. Grace asks, when looking at outperformers, do I use the 5-day, month-to-date, or 1 month? I do a combination of all of them, Grace. We just did a session in the mastery where I went over that. So it just depends on what I'm looking for in terms of whether I'm trying to take advantage of a pullback today, or maybe I'm using 1 day for day trading, etc. All right, ASML. ASML. No, I have no interest in ASML unless you want to be buying puts. Gilby, see this here? That's long puts. I can't buy that. I cannot buy that. The only place where it could be a buy is if you have a far longer time horizon and I typically, this would be me buying shares, but I'm not going to buy a $700 share of something like this. But if you're interested in maybe leaps, keep an eye on the 690 to 700 area on ASML, the 690 to 700, because what you have on the weekly chart is two key support levels. One, the top tier propulsion, and two is an anchored volume weighted average price. Okay, next up is, let's see, Beak Wetter asks, what are my thoughts on SPX this week? Seriously? That it will be trading. Give me a time frame. Give me a direction. That's not even something anyone in the right mind can even answer. What time frame are you looking at? Are you looking at long? You're looking at follow through. And if it's about what rods we put in higher highs, who the heck knows? There's no prediction in trading, gang. We are counter punchers. The S&P is bullish, so I would largely be bullish. The S&P, the SPX, the SPY, the MES, etc. All right, Bitcoin. What would be a good entry? Well, lacking any specificity on what you're looking for time frame wise. Gang, look, if you've been joining me for Charts and Coffee or Top Tier Outlook for a while, you know how we look at the market. Each time frame, or each symbol, each time frame has a unique time horizon. Are we day trading? Are we swing trading? Are we longer term trading? In order to be of any help, right? In order to be of any help, one of the things that I do in the mastery, and I mean this from the standpoint of think right and you'll trade right. What are the things we have to think about when we're trading? What symbol? Obviously, that symbol should hopefully be a relative outperformer within whatever group it belongs to, right? Put that aside. Then what time frame are we looking at? Am I looking at a trade that could last today, 2 or 3 days? Am I looking for something far longer? The longer the time frame, the longer the time horizon, right? Looking at a daily time frame is going to likely put you in the trade for longer than in 1 hour, right? A 1 hour is going to be a far shorter duration than, say, a weekly. So we got to think about these things. One of the things that we try to do in the mastery, and I do this because I want traders thinking about trades from the perspective of, is it a relative outperformer? What's the ambition? A short-term or a long-term trade? Maybe more of a position, right? And if we can put those things together, then we're really having a conversation. Otherwise, this is like, calling in your radio station and asking for your favorite song, which I'm happy to play, but it really doesn't help, right? If we think about the time frame and the time horizon, that's the way we got to think about and communicate our trading questions or our trading ideas. Otherwise, you might say, Rog, I want to buy Bitcoin for the long haul. I want to buy in diamond hands, right? That's a different conversation. Rog, I might want to put a swing trade on Bitcoin. Great. I'm going to wait for a green candle in the gray zone. The reason that I can't give you all the zone for the week is, number one, I don't know where that zone is going to be. Let me show you, though, what I'm looking at. I have a mean reversion zone, which is going to change, not dynamically, dramatically, I should say, not dramatically, but these values, whatever price these values are going to be different every day this week, depending on the open, high, low, close of the candle. Every single day, I get a new segment of a daily price movement range. Every single day, there is a new zone that I'm looking at for my daily price movement range. They change every day. So on a Sunday evening, I can't tell you where we're going to be on Tuesday, but I can tell you what the formula, what the setup is going to be. Preferably, we stay in the uptrend, right? Preferably, we have the green candles, and then I'd like to see the green and the gray. That's what I'm looking at, right? That's all I'm looking at. And I've automated it to the point where every day I can sit down and look at Bitcoin and say, all right, what's the structure? That's at the bottom of the screen. All right. Am I looking for a mean reversion? That's the zone here. Am I looking for a volatility zone? Right? That's the zone here. And are the candles still plotting green, which give me the higher probability expectation that if we dip into the zone, we're to come right back out of it. Yeah. And that's the way, I would think about Bitcoin. So Would I like to get long? Absolutely. I'm with you there. It's just a matter of getting down to that level. All right. So again, that is a wrap. I will see you all tomorrow for Charts and Coffee. We usually go around 6:20 on Sundays. We go 9 to 9:20 on Monday through Friday. So bring your questions. We'll see what we have coming up this week. And don't be too shy, because I probably was a little too hesitant. Don't be too shy about looking at the financials, which I'm happy we did. Again, keep JP Morgan, Wells, and Bank of America on that list. I would say I need to be a little bit more, I like to say what I could do better, not just what have I done, but what could I do better? I'd like to be a little bit more aggressive with outperformers in the S&P, including the S&P itself. And much like setting up the S&P, the way we talked about Bitcoin, what time frame, and if it's daily, I need the green candle in the gray zone. Same thing will go for the NASDAQ, right? What do I need? Tomorrow, I'm going to pull up NQ. I'm going to pull up ES, wait for that green candle in the gray zone, and then I'll look to buy calls on QQQ or SPY. So it's really every day I'm looking at the brand new updates of volatility levels. I'm looking at what the freshest levels of the mean reversion are. So I'm getting the most accurate fills, and I'm getting the most accurate read on the quality of the momentum and the trend. So little things. Gang, I hope it helps, right? I hope it helps, because what I want everyone to do is kind of ditch what's going on TV, make your own decisions, because nobody, including me, cares more about your money than you do. But if you have a process and you have the zones, and someone's going to come say, hey, rather than, hey, just buy this here, we'll tell you why they want to buy this here. Or even better, for example, if somebody asked me about ABGO, I'd say, no, pass on ABGO, pass on Microsoft, pass on Meta, pass on Amazon, start looking at opportunities in things like Apple and Netflix. Those would be better setups. Same thing with the financials. Rag, why did you pick those three? Right? Why not Visa? Why not Berkshire? Why not those other names? Because I'm focusing on the trend. That's why I like, these names. And as long as there's open interest, it makes a lot of sense. I just happen to be in Bank of America, but definitely keep JP Morgan and Wells Fargo on the list. All right. Have a great one. I'll see you tomorrow. Enjoy the rest of your day. Thanks as always for tuning in, and I'll talk with y'all soon.